protecting Main Street from Wall Street. It's Chris Hoffman with Money Unleashed.
How much money do you put into your checking account from work on a month-to-month basis? It has a high probability that with your investable assets, we can replace that paycheck.
It's time to put you back in control of your money.
You've worked for 35 years. It's time for you to not stress. It's time for you to enjoy and live the retirement you want to live.
It's Money Unleashed with Chris Hoffman.
Welcome once again to Money Unleashed with Chris Hoffman at the Hoffman Financial Group. UnleashYourMoney.com is the place to find us, or 404-341-6767 is our phone number. Chris, as always, we got lots to get into on this show, but I got to ask, before we get started, how's everything in your world?
Everything's great. You know, we're watching this market, and it continues to go up at a meteoric rate, and we will take those gains for sure. So we like what we're seeing, and the clock is ticking toward a presidential election, so that's a big event. And then before we know it, we will be in the holidays and headed for 2025. I can't believe I'm saying 2025, but here we go.
It's crazy how quickly it passes. Just you blink and you might miss it, I think is kind of the old saying here. And you mentioned, what's going on with the market here, and could it be cause for celebration? Because we're going to kick things off with a little birthday here, and who doesn't love celebrating one of those? In fact, both you and I have done that over the past couple of weeks. So
that's right. What was your birthday? October
1.
Ah, okay. All right. I'm September 22nd. So, yeah, we're pinned in there pretty good.
As far as this goes, I mean, we're talking about a birthday that's a little bit different because the bull market is nearing its second birthday, and MarketWatch recently discussed that milestone and why the bull market is likely to continue. So going back since October the 22nd of 2022, the S&P 500 has surged over 60%. Here in 2024, the S&P delivered its strongest performance during the first 3 quarters of a year since the 1990s. If it keeps up through the end of December, it would mark consecutive years with gains of 20% or more for the first time since 1998. That info is courtesy of Dow Jones market data. Now, let's turn back the clock just a bit because most bull markets since the end of World War II that have lasted at least 2 years have continued through year 3, according to MarketWatch. So with all of that in mind, Chris, I just thought I'd ask if it's time for us to throw that birthday party for the bull markets or to keep our collective eye on the ball.
Well, I mean, a good financial advisor is going to do both. They're going to make sure you're positioned to maximize your growth if the market continues to go up, but they're not going to push you into ridiculous amounts of risk. So it's standard deviation, understanding what your maximum drawdown in your portfolio would be, and I would say the likely event that we see a correction over the next several years. Mm-hmm. But if we don't, you do not want to get left behind. Right. So this is one of those scenarios where individual investors get caught managing to their emotions. There are some individual investors that are pushing all in and getting highly aggressive. They're moving all of their lower risk portfolios into the stock market, and that's one side of it. And then there are others that are saying, I have concerns that this will not continue and there'll be a major pullback, and they over manage it and they back into very little risk and don't have enough exposure to the market, and the market goes up and then they miss out. So it's either fear of missing out and they push all in, or it's fear of things that are out there that haven't taken hold of the economy or the markets, and they back out too aggressively into safer investments. You've got to live a balanced portfolio. That's why we put every financial plan in writing, and we balance our portfolios among multiple asset classes. So I would describe it as massaging your portfolio, not ripping and tearing at it. Mm-hmm. And that will prevent you, if we go through a major market correction, that will prevent you from having to panic at the wrong time. If you're invested heavily in the stock market, heavily invested in aggressive stocks, and they start to come down 10, 20, 30%, oftentimes we will see the individual investor that manages their own money panic, or they will call their financial advisor and say, I'm out. Get me out. I don't care that I lost 20%. I can't take any more. So that's a good assessment to do right now. When we're enjoying these great stock market returns and the economy has held up well and the Fed has managed this inflation number back down, and now they're talking about kind of slowing those interest rate lowerings, now's a great time to assess, okay, where is my portfolio? What's my maximum risk if the market starts to pull back? What's my upside target under my current portfolio? And that's what the portfolio x-ray will do. It will forecast for you, if you held this portfolio and we assess the last 12 to 14 years, we go back all the way to the Great Recession, will my portfolio hold up if the market pulls back? And if the answer is yes, and if the maximum drawdown, let's say during the Great Recession, was 40% or so at its lowest point, will I lose half of that? Will I lose less than half of that? And if that answer is, okay, I would lose half of what the market does in a pullback, then you got to look at what your portfolio is going to return in the good times. So the name of the game here, folks, is we want to beat the market in every year. We want to beat it going up and make more. We want to lose substantially less when it's coming down. And that involves our protection rotation strategy, where we do move gains, a portion of gains, or some clients prefer to move all of their gains on an annual basis into lower risk asset classes. That's good active portfolio management. That's massaging your portfolio. It's not ripping and tearing. Now, I'll give you an example of what's going on in the U.S., and you've just given it, versus some other country. And that other country is China. Now, I know that's a wild card, so it's very hard to compare the U.S. economy to the Chinese economy, although it's a very big economy, and it does have an impact on the world. Did you know since October of 2007, the Chinese stock market has shown virtually no growth?
Really?
None.
Huh.
None.
I did not know that.
And since 1994, you could also say that it has shown no growth. I read that, or actually I saw it on a financial show last week, and I said, well, I want to research that. Sure enough, I pulled it up. It spiked in October 2007, and it has virtually never recovered. It's slightly higher. And since 1994, it's actually down. So again, two different economies, two different ways of running their markets. But that's not just a lost decade. That's a lost 30, 40 years.
That's multiple.
That would be tough for the U.S. stock market and U.S. investors to survive through. Now, do I think that's going to happen in the U.S.? No, absolutely not. I hold expectation that the stock market over time will perform, earnings will grow, and those will show up in your stock's value. But it is interesting that other markets are not highly dependent on the stock market to fuel their retirement. And I think that that's something for the U.S. citizens to note and take caution in. But again, you don't want to get left out. It's been a great 2 years. So you need to manage to that, and that's why you need a full financial plan in writing. We start with a portfolio x-ray that'll assess your current holdings and your current portfolio, and then we can make a 401k optimizing recommendation, or we can build you a full financial plan that expands your asset classes. So all of that could be healthy for you if you're going into the fourth quarter saying, all right, it's been a pretty good year. I wonder how I'm positioned for 2025 under either scenario, an up market or a down market. So if you'd like to call us at 404-341-6767, ask for the portfolio x-ray, and we'd be happy to set you up with that. And then if that opens your eyes to the reality of your portfolio and you want us to put together a full financial plan, we'd be happy to do that as well. You can also go to unleashyourmoney.com and click on the portfolio x-ray, and we can get started on that. Very easy process. We do all the work, and we'll get you all set up and have it ready for you in writing, and you get a copy of it. So I would take advantage of that, especially going into the fourth quarter.
Yeah, 404-341-6767 is that phone number, or go to unleashyourmoney.com. Now, Chris, some of the things that you just touched on, and sticking with the market for a couple of minutes here, I want to get your insight on this article I saw from MSN, which warns excessive optimism is making the stock market vulnerable. It discusses the idea the overall bullishness becomes entrenched among market timers that may believe every pullback will be shallow and present a good buying opportunity. Now, you talked at length about the importance of bracing for volatility, market corrections, and the likes, because it's important to plan for both the good times and the bad, is it not?
Yeah, it is. And you certainly, when you watch the financial news stations, there's a lot more optimism being shared than pessimism. And I remember when Mad Money Kramer had a meltdown right before the Great Recession, right? He said, they're nuts. They're nuts. They have no idea what they're doing. He got pretty emotional at that time. And we're certainly not seeing anybody pound their fist on the desk saying, we've got a problem. We've got a problem with the national debt. We've got a problem with a slowing labor market. We've got international contagion potentially from countries that are really struggling right now. And we keep hanging our hat on artificial intelligence and the NASDAQ and everything else. So it will be interesting to see what that first domino is that tips over the market and how aggressive that first domino is, and whether there's any black swans in the economy that we don't know about. As an example, everybody missed, or virtually everybody missed, the mortgage-backed securities in 2007, 2008. So is there another black swan out there? We're constantly looking for it at Hoffman Financial Group, but we do not see anything right now that's the market could go down 50, 60, 70, 80%. Doesn't mean it's not there, folks, because typically good markets hide a lot of bad behavior among Wall Street. So, yeah, I do think excessive optimism is making the stock market vulnerable. We plan on taking advantage of that with our clients. And again, optimizing the good years, protecting against the bad years, and rebalancing in a methodical, controlled way versus panicking. No investor should have to call their advisor and say, I've lost money, back me out. You should be meeting with your advisor on a quarterly basis. You should be getting your scorecard on how your portfolio has behaved. But more importantly, they should be forecasting out for you the next 6 months to a year to 2 years and tying you back to your written full financial plan. If they're willing to do that, you should be relatively stable in any environment, make the money that you're expecting to make, and protect your assets against a market crash.
Portfolio X-ray is the way to know where you stand, and Hoffman Financial Group is offering that. It's a complimentary service. 404-341-6767 is the number to get started with one of those. 404-341-6767, or go online to unleashyourmoney.com and click on that little box. It says Portfolio X-ray. It is that easy. Chris Hoffman is an investment advisor representative of Retirement Wealth Advisors, Inc., an SEC-registered investment advisor. Registered investment advisors and investment advisor representatives act as fiduciaries for all of our investment management clients. We have an obligation to act in the best interest of our clients and to make full disclosures of any conflicts of interest. Please refer to our firm brochure, the ADV2A, page 4, for additional information. The Hoffman Financial Group, Retirement Wealth Advisors, Inc., and WSB Radio are not affiliated. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. This information should not be considered tax or legal advice. Individuals should consult with a professional specializing in the field of tax, legal, accounting, or investments regarding the applicability of this information for their situation. Any client experiences discussed during the show are unique to that client. They are not meant to imply or suggest you will experience the same results. Past performance is not a guarantee of future results. Any comments regarding safe and secure products and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Fixed insurance and annuity product guarantees are subject to the claims paying ability of the issuing company and are not offered by Brookstone. Hoffman Financial Group is not affiliated with or endorsed by the Social Security Administration or any other government agency. Investments will fluctuate and when redeemed may be worth more or less than when originally invested. Insurance licensed in Georgia, number 163546.